and market movers. This is The Pulse.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. President Trump says the US will begin guiding some neutral ships trapped in the Persian Gulf out through the Strait of Hormuz, beginning this morning. Reaction on oil then. Well, you're seeing prices up 2%, as we said. European gas futures edging a little lower on reports of an attack on a tanker near Fujira, which is off the coast of the UAE, raising doubts about the US plan. You can see there European gas futures up just 1.3%, so a little higher, but in the context, of course, historical context, not major moves. Brent at $110 a barrel. Let's bring in Stuart Livingston-Wallace then, Bloomberg's executive editor for Middle East, North Africa and Russia. Stuart, what do we know about the details of this plan and what it's actually going to do in practice?
Yeah, good morning, Tom. So, I mean, the short answer is we know virtually nothing about it. So we kind of know the overarching aim, which is being characterised as very much a humanitarian mission. And there is some justification for that. Remember, we've had hundreds and hundreds and hundreds of ships trapped in the Persian Gulf for weeks now. And then when you extrapolate how many crew members that involves, we're talking in the thousands, and they've just been sitting there. So in terms of getting them out of the Persian Gulf and back into sort of the global fleet, that makes a lot of sense, not just from a humanitarian point of view, but just in terms of an economic point of view. The impact on global shipping has been very profound. But in terms of how this is actually going to work, I mean, it's not very promising because you've already, as you mentioned, there's been one attack on a ship north of Fujira. There was another on a bulk carrier a few hours before that. And the Iranians have made it very clear they don't necessarily have an appetite. Underlying that is this notion of, well, which ships would actually be eligible for this passage if and when it happens, and what exactly constitutes a neutral country, because it does feel there are very few countries seen as neutral by either side.
OK, so we'll watch to see how this is actually implemented and what the consequences will be. Meanwhile, OPEC meeting, of course, over the weekend, OPEC Plus, but minus, of course, the UAE. They have agreed to increase production. Stuart, is this purely symbolic, given the supply constraints out of the Middle East?
Yeah, I mean, I think there's largely there were two purposes here. Number one, they didn't say anything about the UAE, and I think largely it was intended to sort of be a business as normal kind of statement. This was largely what was anticipated before the UAE left, and they're going to carry on. But as you point out, it's a drop in the ocean. It probably won't happen anyway because of the constraints that are in place. And let me give you some context here. We had ANZ come out this morning reiterating something that Vitol said a couple of weeks ago, which is that basically we should anticipate net something like 1 billion barrels of lost supply to the world markets over the course of this war. And again, that's still a predictive number because we don't know when it's going to end. And it's very hard to get your head around what exactly 1 billion barrels looks like. But in that context, 188,000 barrels doesn't feel very much, and I think that's probably the right sort of reading into it. So if you look at the oil price today, oil market has largely discounted it. Yes, it was sort of anticipating it anyway. The key question is how fast can you get Hormuz reopened? How fast can you get a permanent ceasefire, that is an end to the war, and then everyone can start rebuilding that production? But it doesn't really change anything in the short term.
Stuart, thank you very much indeed. An important update, of course, out of the region. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Meanwhile, China, and this is linked, of course, ordering its companies not to comply with US sanctions, on 5 domestic refiners linked to the Iranian oil trade. The Commerce Ministry over in China says the US measures unlawfully restrict normal trade with third countries and breach international norms. The US Treasury Secretary says the US is closely monitoring China's purchases from Iran.
They are the largest state sponsor of terrorism, and China has been financing them with their energy purchases, and we've been encouraging them not to. And that is a topic of ongoing discussion.
Well, Bloomberg's North Asia EcoGov managing editor Jenny Marsh joins us now. Jenny, this is potentially adding to what could be a showdown between the US president and his Chinese counterparts if they meet later this month. This is a major move from China.
Absolutely. This is the first time China has ever openly directed companies within its borders to defy US sanctions. And I think that sends a very powerful signal to the Trump administration, just sort of less than 2 weeks out from this meeting. And I think sort of the trigger here is, China really is drawing a red line when it comes to energy security. They're very unhappy with the fact that the Trump administration is trying to essentially choke off its access to Iranian oil, which before the war counted for about 14% of China's oil imports. And I think it also just more broadly shows that the longer this conflict with Iran drags on, the harder it is for the US and China to sort of separate their bilateral relationship with this conflict, which is sort of, having such a dramatic impact on the world, both economically and politically as well.
OK, Jenny, thank you very much indeed on that move by China around those refineries that do face those sanctions from the US, and China telling those refineries not to abide by those sanctions. Again, just around 2 weeks before the two presidents are meant to be meeting. Jenny Marsh, thank you very much indeed for that update. Let's check in on the European markets right now, of course, with the detail that the UK is closed, of course, for the bank holiday. So across the benchmark, you're seeing losses now. The futures have been pointing to a brighter session, but right now across the benchmark, you're seeing losses of 0.2%. Over in Germany, the DAX currently up just 0.1%. The CAC current over in France is down 38 points. Across your sectors, you're seeing losses for the auto sector on that tariff threat from President Trump, saying he will raise tariffs from 15 to 25% on European autos. So that is a picture as well. That is one of the factors. Currently, the CAC current down 0.5%, and autos as a sector is under pressure. Over the weekend, the Fed's Neil Kashkari warned about the impact, meanwhile, of the Middle East conflict. Take a listen.
The longer it's closed, the higher likely energy prices and fertilizer prices will go, the bigger impact it's going to have on inflation here in America. And then we at the Fed have to take that on board. And so I was simply saying that there's so much uncertainty about the outlook in the Middle East right now. I don't feel comfortable signaling that a rate cut is in the cards. We might, in worse scenarios, we might have to go the other direction.
Well, join me now for a closer look at these markets is Maria Vassalou, head of the Pictet Research Institute. Maria, good morning. Thank you for joining us. What is your take on whether or not this divergence that we're seeing between the equity market rally, most pronounced in the US and Asia, and what we're seeing on the energy, inflation and pricing front, to what extent that divergence can continue?
Well, the equity market in the U.S. is very much driven by what is happening in the AI space and in the technology space. And as we've seen lately, the news from those companies are quite positive. Also, we should not forget that the impact of the war in Iran is much milder on the U.S. economy, despite the pickup in inflation. The U.S., obviously, as we know, it's energy independent, and therefore it has a smaller impact on the increased oil prices. On the other hand, in Europe, we see that the effect is much more significant. The Bank of England is discussing potential rate increases going forward. The market is pricing 2 hikes, and in the case of ECB, 3 hikes. We don't see that in the case of the Fed.
Do you think those hikes come through for Europe? I mean, given the softness, Europe is exposed, of course, more exposed, as you point out, to that energy story, higher prices. So that's the inflation part. But arguably, there's a growth hit as well.
The growth trajectory in Europe is much weaker than that in the US. And on top of that, at a time where they need to invest in defense, they need to invest in technology, they have this impact of inflation in their economy, and therefore they have to choose between promoting growth and combating inflation. So higher interest rates in those economies will certainly not help the economic front. And I think part of the reactions that we're seeing from the leadership in European countries come exactly from that concern that this war in Iran comes at a really bad time for those economies, and they cannot afford to have it continued because of the effect it has on inflation.
How concerned should investors be about this renewed threat by President Trump to put additional tariffs on the European auto sector?
The irony with this war is that now that it's ongoing, the more coordination there is among the nations in trying to bring the results that are desirable in the case of Iran, that is to avoid the nuclearization of Iran, destroying its defense capabilities and secure safe passage from the Strait of Hormuz. To achieve those objectives, ironically, there is a need of a broader collaboration and coordination among nations, including the European nations. So the fact that Europe is reluctant to help actually prolongs this conflict, which in turn will have a more severe effect on European economies.
How long does the Strait of Hormuz have to be closed for Europe to experience real shortages in terms of the supply chain ruptures that we're seeing?
We are already seeing significant effects. We see the effect on inflation, as we discussed before, and there is also potential shortages of oil and fuel in Europe that could come in the coming weeks. So the situation is quite pressing, and therefore there is a real need to come to an end with this conflict. So the fact that Europe is reluctant to get involved actually doesn't help its case at this point.
Given the AI trade that you touched on in your first answer, Maria, is US exceptionalism back, given the AI trade and that relative energy independence that the US has, and how should investors be thinking about those dynamics?
In relative terms, US is in a privileged position, I would say, of course, because of its leadership in AI and technology, because of its energy independence. And at the same time, we know there is this big competition with China. But the situation in Iran and is also affecting very significantly the Chinese economy, and it's emblematic of this effect. The fact that China is coming out with all these reactions to sanctions of refineries, to the blockage of the Strait of Hormuz, etc. The Chinese economy in the short term is really facing significant headwinds, and therefore, in relative terms, the U.S. is better off at this point.
Do you think the meeting still happens between the two presidents in a little under 2 weeks?
Well, it's still scheduled to happen. I think as the tensions increase, potentially there is more need for a detente and a meeting to happen. I think what the U.S. has been trying to do is really counterbalance the advantages that China has on rare earths and other resources with a great control of energy supplies globally. So we've seen what happened with Venezuela. Now we see the effect of restricting supply of energy from Iran. We've seen also the effects of restrictions on Russian oil. So all this restrictions that now China is facing in terms of its access to energy are really having a real impact on its economy. so by balancing out the negotiating levers that China has on rare earths with oil, perhaps there will be some room for an agreement that will smooth out the relationships in the short to medium term.
OK, Maria Vassalou, thank you very much indeed, head of the Pictet Research Institute, with those insights. Let's check in on eBay pre-market then. Currently that stock is higher, called higher by 8.5%. This is on the back of the pretty remarkable news. GameStop proposing to buy eBay for about $56 billion in cash and stock. That would be an approximate 20% premium to the Friday close. eBay called higher on the back of that news. So a stock for you to think about and consider as we lead up to the US market open later today. Coming up, we're going to have an interview with the Eurogroup President. We have had that interview and we'll play some of it for you. President Trump as well threatening at the time more tariffs on EU automakers. So how European leaders are thinking about the potential response. That interview is next. This is Bloomberg. This is The Pulse. I'm Tom McKenzie in London. Happy Monday, everyone. Eurogroup President Pierrakakis says Europe is ready to respond should President Trump raise tariffs on cars and trucks from the EU, as, of course, he has threatened. Take a listen.
Needless to say, I think this discussion that's currently taking place is quite unnecessary and quite unfortunate. The last thing the global economy and the European economy needs right now is an extra layer of uncertainty on top of what is happening in the Strait of Hormuz and in the Middle East. And needless to say, our side of the bargain has been fully met, has been fully kept with regards to the joint statement commitments and the legislative timetable which we had in order to pass them. We have met all prerequisites in this equation. So in this regard, our number one choice always is dialogue. We want to be a predictable partner in the international economy. We believe in the transatlantic relationship. We consider it to be important, existentially important for the world. But having said this, if there is a deviation from what we have agreed upon, obviously all choices will be on the table, all options will be on the table.
So that is to say that retaliation is on the table. There's also potentially suspending the deal, which we saw the first time when there were tariff threats made on Greenland. But is there also an alternative in which they accelerate the ratification process? This has been one of the big frustrations from the United States, is that till to this day, despite the fact that the trade deal was agreed to in July, it has still not been implemented. As I said, dialogue is our number one choice, our number one option. And we want to keep our side of the bargain. The legislative timetable is well known on every occasion at the European level. So we're hoping to meet that because, as I said, we want to be predictable partners and predictable players in the international economy. So that's option number one. What I'm saying is, if we deviate from this, if an extra layer of uncertainty comes into the table practically, not only in terms of vocabulary, then obviously we will have all options available. But we're hoping not to reach that point because it's existentially important to coordinate, collaborate, and keep an open channel of communication with the United States. And is the trade deal implementable despite the fact that there are still these steel and aluminum tariffs that some of the EU is saying are in contravention to the deal? Is that still an implementable deal from your perspective? I mean, we want to ratify the deal that has been defined in the joint statement. So the idea is that everything shall be implemented. That was the plan all along. But having said this, it's quite problematic, let me repeat the original point, to add layers of uncertainty right now.
Well, that was the Eurogroup President speaking to our Chief Europe correspondent, Oliver Crook. Ollie joins us now. Ollie, why is the US reigniting the trade war now with its European partners?
We can only really speculate on that, Tom. There was not really any precise reason given by the President of the United States when he put this out on Truth Social on Friday, and now we sort of speculate that it could be just sort of a tactic to try to get the Europeans to accelerate their process of implementing this trade deal. This is one of the parts of the conversation we just had with the Eurogroup President. I mean, part of the frustration of the Trump administration with the Europeans is that this was a deal that was agreed to back in July. It has gone through all these different sort of issues and delays. Again, part of that up to the United States, down to some of the tariff threats threats that they made around Greenland, down to the IEEPA, basically statutes being struck down by the Supreme Court. That all caused delays. But then again, the European Parliament added some new conditions, so it needs to go back to the Council and all these sorts of things. So potentially it's just a way for the United States and President Trump to add additional pressure on the Europeans to actually ratify the current deal. But then again, it could not be. I think it's anybody's guess. And this is not going to be officially on the agenda here today in the European Council for European finance ministers, but you can bet this is going to be top of the agenda and a big conversation here for European finance ministers. Again, the big question, how do you react? Is it about negotiation or this is about retaliation?
Yeah, John Authers, the opinion piece today from John Authers over at Bloomberg Opinion on the Bloomberg terminal, saying this looks like kicking a man when he's down. The tariff threat and the threat to cut and reduce troops as well in Europe. How is that going down? So this is a Trump threat to reduce the numbers, specifically in Germany, by 5,000 or more, he said.
Yeah, so I mean, this is obviously a very big deal, and this is something that has been on the cards, been on the books potentially for the Europeans for a while now. We should say that that is potentially not a new posture. The United States has said explicitly that they're going to withdraw some troops from the European continent, that they're reappraising their sort of global footprint. They want to be more concerned with and more concentrated on Asia Pacific. So that is going to be one of the things. But of course, Tom, you can't ignore the timing of this. Both the implementation of auto tariffs, who does that hurt most? The Germans. And of course, withdrawing troops from Germany. This is all in the wake of the Chancellor of Germany basically saying that the United States and Donald Trump is being humiliated in Iran. He doesn't really have a plan and that things are going very, very poorly in a sort of uncharacteristically candid moment by the German Chancellor. And this is one of the repercussions. Of course, President Trump is still very upset, not just with the Germans, with the Spanish, with the Italians, with everybody in Europe for effectively not taking a more active role in the Straits of Hormuz and in the Iran conflict. But again, what you're seeing here from the Europeans is, they're acting much more serene towards these kind of threats than you've seen in the past. We didn't get that much commentary from the German government over the weekend. Boris Pistorius, the defense minister, said, we take note of this. But again, the strategic bases within Germany, particularly Ramstein, serve a very important function, not just for Germany, but for the United States.
Ollie, thank you very much indeed. Oliver Crook, Bloomberg's chief Europe correspondent. Meanwhile, President Zelensky of Ukraine, of course, is on the ground with European leaders and others in Armenia. And he's urging sanctions on Russian oil, banks and the military at a time, of course, when the US has actually eased up sanctions on Russian oil and is looking at drawing down troops in Germany, which some would argue is a win for Vladimir Putin. Let's bring in Bloomberg's Greg Sullivan right now from some analysis. Greg, what's the latest that we've been hearing from the European political community meeting in Armenia, and specifically what we've been hearing from the Ukrainian leader?
That's right. Zelensky, Ukrainian President Volodymyr Zelensky is there. This is obviously very important to him to meet with European leaders, especially as they're prepping this 90 billion euro loan. Of course, that's the loan that was held up by Hungary until the recent Hungarian election that saw Viktor Orban booted from power and then ultimately freed up the loan. Now we have the UK saying that they would also like to join the 90 billion euro loan and cooperate and strengthen defense ties with Brussels, making the argument that working together will benefit not just the UK and the EU, but also Kiev. Clearly, this is good for Zelensky, who wants to see his support lined up. Before the loan was approved, there were questions about how long the funding would actually last and whether they could continue on. So now he's having the conversations about the first tranche. He's still urging sanctions against Russia, which is continuing to bombard Ukraine. So clearly, this is an opportunity for Zelensky to keep making his case and make sure that that loan eventually comes through.
Greg, thank you very much indeed. Greg Sullivan with that update. Coming up, the US plan to see trapped ships guided through the Strait of Hormuz. We're going to discuss the latest in the Middle East with Chatham House Associate Fellow Aniseh Bassiri Tabrizi with the details and with an analysis. Stay with us. This is Bloomberg. Good morning. Welcome to the Pulse. I'm Tom McKenzie in London. These are your top stories. President Trump says the US will guide neutral ships through the Strait of Hormuz from today. But the details remain unclear. Oil swings the Strait as way conflicting signals from the Middle East. China tells its firms to ignore US sanctions on 5 domestic refiners tied to Iranian oil. And EU leaders meet under the shadow of Trump's threats, troop cuts in Germany and fresh tariffs. Eurogroup President Pierrakakis says Europe is ready to respond if Washington follows through. So President Trump says the US will begin guiding some neutral ships through the Strait of Hormuz from today. Let's bring in Bloomberg's Abir Abu Omar from Dubai with the details. Let's talk through the reaction, first of all, in the oil markets, how traders are weighing up this latest announcement from President Trump, something that's meant to be implemented today, Abir.
Yeah, good morning, Tom. So you're right. Look, I mean, this was supposed to be implemented today. We don't know how the plan is going to be carried out in reality, but the reaction in oil prices in the morning, early in the session, they were steady. They went down slightly in Brent and WTI. But what we saw after news about this tanker that was hit just north of the Fujairah coast in the United Arab Emirates, oil prices spiked again. So you're seeing Brent at around 111. WTI also increasing about $104 a barrel. And this interesting report this morning that came from ANZ that suggested that with more than 15 million barrels per day that were lost since the start of this war about 2 months ago now, about 1 billion barrels are lost from the market. Now, that is a gigantic number. Something else that the report points out that is quite interesting is that the extent of the damage is still not fully reflected in oil prices. That suggests even more upside in Brent and WTI. So quite concerning, and traders not really reacting to this news by President Trump that suggests ships are going to be escorted or ships that are going to pass through the Strait of Hormuz, because in reality, we just don't know what the plan is going to look like, as I mentioned.
What do we know, Abir, about what has been outlined, at least by CENTCOM and by the US president, in terms of how this may operate, this plan?
Yeah, so look, I mean, what President Trump dubbed this plan as is Project Freedom, and it is essentially dubbed as a plan for humanitarian rescue with millions of barrels of crude, but also hundreds of ships that were stuck in the Strait of Hormuz since the start of this war, over 60 days ago now. This, according to President Trump, is to bring those ships, people, countries, as he posted in his Truth Social post, to bring them through, to bring the people that are stuck in those tankers, in those ships in the Strait of Hormuz through. CENTCOM also did mention that the U.S. military will get involved, but an interesting report by the Wall Street Journal this morning suggested that there will be no U.S. Navy escorting those ships. And so a lot of contradictions here and a lot of murky details about how exactly those ships are going to go through. A lot of analysts pointing out that perhaps oil prices are not reacting as drastically to the news because we just don't know how it will happen in reality. So we monitor closely. What we know is that Project Freedom takes place today, or starts to take place today, and we'll definitely be monitoring those tanker movements across the Strait of Hormuz, Tom.
We're hearing that there are talks still between the US and Iran, and maybe that's still a positive for those looking and hoping that there will not be a return to kinetic contact between the two sides. What do we know about this kind of passing back and forth via Pakistan, different sets of proposals?
Yeah, so look, back and through is the right way to put this. Iran had put through a 14-point proposal. We don't know the full extent of the details in this plan, but what we know, reported by Axios, is that Iran wants this war to end in 30 days. No ceasefire, no more talks, just 30 days into the war, an unblocking of the Strait of Hormuz. And once that is reached, Iran is suggesting a month of talks to start about its nuclear program. Now, this was put through via Pakistan, as you had suggested. President Trump came with a bunch of contradicting statements yesterday, saying that it could lead to very positive talks, but then saying that the plan that Iran had put through is actually not satisfactory. Iran earlier also saying that it got a response via Pakistan from the U.S. About its plan, but we don't know what the U.S. response to that was. So, yeah, some positive signs when it comes to bringing back those talks or commencing them, but we just don't know where things stand between those two as of now, Tom.
Abir, thank you very much indeed. Again, an important update out of the region for us. Abir Abu Omar in Dubai. Let's get more analysis right now and dive a little deeper and bring in Aniseh Bassiri Tabrizi, Associate Fellow at Chatham House. Aniseh, how seriously do you take this plan from the Trump administration that's meant to be being put into place today to try to help some of those vessels, some of those cargo ships to navigate out of the Strait of Hormuz?
Good morning. Well, I think, as the reporter was mentioning just now, there are a lot of contradicting details coming out. So I think it's very possible that it will be implemented, but we just don't know how, what it will mean in practice. And I think from the Iranian side, the reaction is likely to be one of watching and seeing. But if the plan is going to be that of basically unlocking the oil and the ships from the strait, Iran is likely to see that as basically breaking the ceasefire and therefore retaliating. So while we were talking about the potential positives coming out of this exchange of notes and proposals for the dialogue, there is also the very, very likely scenario of a renewed escalation between the two sides as well.
OK, you think that risk is still real in terms of a potential renewal of attacks between the two sides? Who do you think, which side has the staying power at this point? We seem to be moving into a kind of an economic war, a war of, at least of economic attrition between Iran and the US.
Yes, for sure. We have seen that to be the case, especially over the past month, almost a month since the ceasefire, even if fragile, has been in place. But the economic hardening stance from each side makes it look like an economic war first and foremost. I think regardless of how the plan is going to be implemented, if the plan is going to be implemented, we are likely to see this economic war continue over the next few weeks. And we are likely to see tensions at sea, in the strait in particular, continue. I think neither side is really willing to give up the leverage that is accrued. Iran with closing the strait, and the US with the blockade. And I think these two sides are really unwilling to change their red lines so far and move away from what we have seen as an escalation at sea foremost. But I think, as I said, there is a potential for this escalation at sea also to broaden up to a resumption into a kinetic escalation as well, if there is no unlocking of the stalemate, either through diplomacy or through the unblocking of the Strait of Hormuz.
What is the economic tipping point for Iran? Scott Bessent, the US Treasury Secretary, says they are getting close within a week to having to cap their wells. What is the point at which the Iranian economy is fundamentally undermined as a result of this?
Look, it's very difficult to say what is going to be the tipping point, economically speaking, for Iran. We know that the blockade is biting. Speaking with contacts on the ground, you can hear that inflation has reached 70% on most items, 100% on some other items. There is a very, very significant pressure on the Iranian population because of the blockade, because of the unintended consequences. But does that mean that the Iranian side is going to change its calculation? So far, that has not been the case. I don't see any sign that the Iranian regime and the establishment is looking at the economic picture and seeing that as a reason to change its posture, either on the Strait of Hormuz or on the nuclear issue and overall towards the United States. And I think really defiance is the message that we are seeing from Iran. And so far, the message that they have delivered in this 2 months plus war has been what they actually pursued.
What is the current resilience of Saudi Arabia, of the UAE, of others in the region, and where they stand on this conflict? There had been reporting leading up to this US blockade that some in the region had in fact been pushing the US to continue their military strikes. Where do things stand in terms of the regional response to the current status quo in the Middle East?
Well, we know that there is not a fully united picture on how to proceed on this war. I think overall, all the countries in the region would want some sort of stability to be resumed, but the way in which this stability should be resumed is perceived to be different from different countries across the region. Some think that at this point it is better to continue with the war and trying to destabilize, if not lead to the collapse of the regime. And some others think that some sort of coexistence with the Iranian regime needs to be realized in order for the stability of the region to be returned to the way that it was, if possible at all. But I think overall, this war obviously has implication for the region, for the visions of the countries of this region, and for what they will be able to pursue moving forward, especially if this continues to drag on, which at the moment there is no sign that is not going to be the case.
How much do you think this is going to play into the meeting between President Xi and President Trump in a couple of weeks' time, and whether or not it causes a real source of friction, how China is responding? And we're seeing how they're responding to the threat of US sanctions on some of their refineries.
Well, for sure, it's going to be one of the main topics of discussion between the two sides. We saw that the meeting was once postponed. So we know that this also has to do with the war, with how the U.S. is putting pressure on Iran and therefore also on its export of oil. We know that China is the main customer of Iranian oil, and therefore, the consequences of the war and the closure of the strait are heavily going to be bared also by China. But I think there are so many issues that the two sides have to discuss that this is going to be, like a multi-layer chess game in which the war is also going to be a factor, but not definitely the only one.
OK, Aniseh, thank you very much indeed. Aniseh Bassiri, Tabrizi, Chatham House Associate Fellow with the analysis and insights as the US says it will start implementing that plan to aid some of those carriers, some of those ships through the Strait of Hormuz using US vessels, they say, aircraft and drones, though the details of how they implement that, of course, remain a key question. Coming up, we're going to switch focus because gaming retail chain GameStop has offered to buy eBay for about $56 billion in cash and stock. Are they for real? There's details on that story coming up next. This is Bloomberg. Welcome back. Happy Monday. This is The Pulse. I'm Tom Mackenzie in London. The collapse of Spirit Airlines is cascading through airports across the US, leaving passengers stranded mid-journey and sending rival carriers into rapid response mode to contain the damage. The airline has cancelled all flights and told customers not to go to the airport after failing to secure emergency funding to keep operating. US Transportation Secretary Sean Duffy says he doesn't think the US government needs to provide financial lifelines for now to other low-cost carriers following the collapse of Spirit.
There was a number of ideas being floated on how the government could step in and be helpful to Spirit Airlines. The president was like a dog on a bone, trying to figure out a way to keep Spirit afloat. He was concerned about the employees of Spirit. I was in the Oval many times hearing him talk about the employees and the customers. In the end, this was a creditor issue. Again, they have the final say of whether they want to do a deal with the government.
Well, let's bring in Bloomberg's managing editor for aviation, Benedict Carmel. Benny, bring us up to speed then on the state of the collapse of Spirit and what it means for the broader industry, what it means for passengers, what it means for the broader airline industry in the US.
Well, as we just heard there from Sean Duffy, the US Transport Secretary, this collapse brought together a lot of sort of different strands. There's the economic fallout, meaning you'll have stranded passengers. There are the assets that will now sort of get apportioned to other airlines. But there's also the wider political fallout. Could this have been avoided? Should the government have stepped in? The Trump administration in particular has been fairly active when it comes to bailing out some assets. Intel comes to mind memorably. And then Trump, over the last couple of weeks, did float the idea that maybe they should also step in. He didn't, in his words, want to see 14,000 jobs disappear. So he saw an opportunity there. But in the end, as we just heard here from Sean Duffy, it came down to sort of, did creditors like this idea? Would they want to cede control of the asset? And in the end, no deal was reached. And overnight, from Friday to Saturday, it was essentially game over for Spirit. And this is an airline that has been troubled long before the spike in fuel prices that really sort of led to the latest crisis. This is an airline that has been in bankruptcy previously twice. That has tried to merge with other carriers to sort of find a safety net, an umbrella under the roof of somebody else. All of those attempts failed. So in the end now, what we're seeing is that collapse of this very sort of canary yellow with this iconic livery airline, and others will start looking at taking over the slots, taking over the pilots, and in the short run, taking over the passengers that remain stuck.
Well, what does it mean, Benny? I mean, you've touched on the fact that, look, jet fuel and higher jet fuel prices were a factor, clearly a factor for this airline, but certainly not the only factor. So to what extent should we extrapolate out to other players within the US airline industry in terms of potential vulnerability as we see that jet fuel costs continue to rise?
Well, again, Sean Duffy did say he doesn't think that others will want or need a bailout at this point, but things can move quickly in this industry. Once you're vulnerable and once you're sort of on the edge of the cliff, as it were, then things might change very quickly. Spirit was in some ways a unique case. They did spearhead this ultra low-cost model, and that is a model where everything has to go right. Nothing can go wrong. You don't have very much room to maneuver. Your margins are thin, and once something like the Iran war, like the spike in fuel prices happens, that's when things did start going horribly wrong for Spirit. But again, this was a carrier that saw its fundamental business model already under attack in the last couple of years. People were migrating more towards sort of the more premium end of the cabin and the offering. People were less willing to spend extra on what was already a very low-cost proposition from Spirit. So really, their model didn't seem to work anymore. Other airlines have said that this is not a carrier that we think has a viable future. If you talk to some people in the industry, they will tell you this is an airline that really shouldn't have been saved. But it will also raise the question of would a merger with somebody else, would that have changed something? And might that mean that going forward, we will have other airlines making that consideration? We know that United Airlines has been looking around. We've reported that they were interested in American Airlines. So clearly, one option might be, rather than seeing an airline go bust, like we've seen with Spirit, might be to consider, can we hasten consolidation? Can the US government support consolidation to avoid additional breakdowns?
Do you think is that a story that plays out in Europe as well, Benny? The consolidation story, as we see Europe kind of uniquely exposed, well, not uniquely, but certainly very much exposed to the jet fuel story. Does that potentially accelerate a combination of some of these carriers in Europe?
Well, there's not a lot left to consolidate in Europe. That's the other thing. So you have the big three groups. You have IAG, under which you have British Airways and Iberia and so on. Then you have the Air France group, and then you have the Lufthansa group. And those three big groups have, over the last couple of years, already mopped up a lot of these sort of smaller assets. Lufthansa bought ITA, which was the successor to Alitalia. There's interest now in TAP, which is the Portuguese carrier. But that's really it. There isn't that much left. If you think about who is left as an independent airline in the region, there are companies, sort of specialist companies like Condor, there are companies like Finnair in Finland, and then there's obviously the low-cost carriers, but they're probably too big. Michael O'Leary of Ryanair will have you know that he thinks Wizz Air will go under, and that he thinks that EasyJet is in trouble, but you know, he's obviously slightly biased on that front. But so we might see some movement over time in the low-cost area, but broadly speaking, the consolidation that we saw over the last decade has pretty much come to a conclusion at this point in Europe.
OK, really interesting. Thank you for that update. Bloomberg's Benedict Hummel in Berlin. Let's get to what's happening in terms of the deal space, because we have this story around GameStop, of course, famously a meme stock, pitching $56 billion takeover of eBay. So attempting to take over a company with a valuation much higher than its own, of course. A $56 billion in cash and stock takeover. That is the bid. It's a bold attempt by the CEO, Ryan Cohen, to take over a well-established e-commerce name, of course, several times larger. And you can see eBay stock is rallying 9% on the back of that. GameStop stock is called lower by around 0.5%. This is pre-market pricing, of course. Let's bring in our deals reporter, Manuel Baigori, for the details. Manuel, what do we know about this proposed deal then?
Yes, Tom, what an exciting Monday. Here we go with a $56 billion proposed deal. GameStop trying to buy, combine with the iconic marketplace eBay, right? I mean, it's still preliminary, but the proposal has been put forward, and obviously it will require a lot of interesting maneuvering to put together. There's been some early skepticism from analysts about how the combination might potentially work out, but obviously it's bringing together two very iconic brands, companies, and potentially trying to adapt to ever-shifting consumer demands, right? So here we go with, as you rightly said, I mean, GameStop being a lot smaller, like 4 times smaller in terms of market value compared to eBay, yet they have around $9 billion in cash ready to spend, and also non-binding commitment potentially in bank financing of around $20 billion to bridge that gap. So potentially things are being put in place as we speak, yet a lot of hurdles remain for the coming weeks and months, which is going to make this a very interesting transaction to watch.
Yeah, well, indeed, Manuel. How is this viable? I mean, what is the fit? What is the market fit for GameStop and eBay? What is the rationale underpinning this move?
Yes, Tom, a lot of people are wondering that. It's been a bit of a surprising move in a way, yet you can find some synergies, some overlap between the two. They've been growing in areas such as collectible toys or resale. Both of them have been trying to adapt to that shift in consumer demand, especially take GameStop, right? Coming from a more traditional brick and mortar type of retail business franchise into eBay, which is obviously one of the better well-known globally marketplaces, which also, by the way, has been in a bit of a turnaround by itself. So the two are being caught kind of in the middle and trying to readapt to these shifting consumer demands, and they believe that by putting them together, at least GameStop CEO believes that by putting the two together, they can actually find some more synergies, and potentially he believes that eBay can be worth a lot more by bringing the two brands into one. Yet obviously, given the big value gap, it's gonna create a lot of tension between shareholders, potentially also in how you structure such a big transaction. So I think what the market thinks in the coming days and weeks will be very, very important for the chances of this deal to go up. Obviously, as you rightly pointed out, the pre-market trading in eBay suggests a good reception from investors, but I think there is some hurdles to be overcome for this to be a successful one.
OK, Bloomberg's deals reporter Manuel Baigori with the details, the context around that potential takeover, at least that takeover bid, GameStop for eBay. And as Manuel was saying, eBay investors are cheering this, at least for now. Let's check in on the broader European markets, where the stock 600 is currently down 0.3%. Across your sectors, you're seeing some losses there for the auto sector on this tariff threat from President Trump. That sector's down 1.1%. The DAX is currently flat right now. The CAC current over in France is down 57 points, down 0.7%. And again, across the benchmark, off by 0.3. When it comes to US futures at record highs on Friday, E-minis are pointing higher on the S&P E-minis by 0.1%. Nasdaq 100 futures pointing to gains of 0.2%. Up next, it's Bloomberg Brief. This is Bloomberg.